Welcome back, everyone. Chris Drizga here with your year-end market update and 2025 forecast for Orange County's office sector. Market conditions improved slightly as we closed out 2024. We have a countywide vacancy rate of 16.07% and an availability rate of 20.16%. Both figures represent declines from the previous quarter, and several properties were actually removed from the inventory base, either because they were sold to owner users or are being demolished and redeveloped into other product. The average rental rate is $2.71 a square foot. Sales pricing is $246 a square foot, and the average cap rate is 8.1%. There were 334 lease transactions and 13 sale transactions completed in the fourth quarter. I expect 2025 to be another challenging year. However, I do think it's a good entry point for long-term capital looking to acquire assets. Calls for a massive correction in lease rates are fading, and major corporations such as Google, Meta, and Amazon are renewing calls to get their workers back in the office full time. That trend will likely trickle down to the local businesses, which will result in increased transaction volume and velocity. For now, landlords need to remain generous with concessions, and they need to invest heavily in amenities for their properties if they're to remain competitive over the long term. Notable leases include Willow Labs. They leased 63,000 square feet in the Irvine Spectrum. Acrisure leased 59,000 square feet in Costa Mesa, and Hyundai Glovis leased 53,000 square feet in Irvine. As for notable sales, the Orange County Transportation Authority bought 2677 North Main Street in Santa Ana for $54.5 million. Seagard Real Estate sold Tustin Financial Plaza. It's a 5-building office project in Tustin for $27.5 million. And Circle Vision sold 17771 Cowan Avenue in Irvine for $9.1 million. You can visit my website, chrisdrizga.com, for the complete reports. I appreciate you stopping by, and I look forward to seeing you here next time.